All right, so let's break into ETF news today. And of course, the deadline is approaching. There is a wave of ETFs that are upon us. We'll break it down for you guys. My name is Paul Barron. Welcome back into Tech Path. Hopefully you guys had a really good holiday. And we'll get into some news today. Before we start, I want to thank our sponsor, and that is iTrust Capital. If you're looking at long-term holding, one of the things you can go into, of course, is a crypto IRA. And it's kind of that season. You're ready. Maybe you could still have a few days left before you can get your own IRA and still take your tax benefits. Make sure and, of course, check with your own tax advisor. But the cool thing is you can get into crypto in a big way. And, of course, you can go into Bitcoin, Ethereum, as well as precious metals, altcoins, etc. Just go out over to itrustcapital.com, check it out. Make sure and use our link down below because it's going to give you guys a $100 funding reward to get you started. All right, let's take off here. I want to kind of start with the chart here, and then we'll get into some of the news. Bitcoin obviously dumping a little bit here on the daily, and you can kind of see where we've seen it, of course, hitting at almost 44,000, dumping down here to right around 42,000, may break through. Right now I am using the Lux Algo chart below, so you guys can, of course, see some of the actions out here. One thing to watch, and this is something we've been kind of looking at from a sentiment standpoint, is it's been still very bullish, but over the last 3 to 4 days, we've seen Solana run and then also take a correction, ETH run slightly, take a correction, and then Bitcoin kind of same thing. So we're going to break all that down. Is this a little bit of incoming market fatigue for what's happening with ETFs? I want to jump into a couple of news items here. Bitcoin ETFs applicants deadline is approaching, so this is a big deal because if anyone has not filed before this deadline, which is the end of the year, then they're pretty much outside the window of getting in on this next wave. So any issuer that doesn't meet the deadline will not be part of the first wave of potential spot Bitcoin ETF approvals in early January. And then you see a few points here. Recent report revealed that the SEC has a stringent deadline for Bitcoin ETFs. This is December 29th that this will be happening, so just here in a few days. Fred Krueger, also a journalist, kind of looked at this and said this is going to be a big turnaround between the potential approval and trading on the market. This could be actually just a matter of days. Let me kind of zoom in on these notes for you guys. So on Jan 8th, ETF should get approval, 8 through 10. Remember, the 8th is on a Monday, so we could have action as early as the next week on this, so around January 15th, potentially. Krueger also declared that it will change everything. I would agree to a certain extent. I'm still not sure that we're going to see a massive run, from not only the institutions, but more importantly from retail, I think, on this. So real discussion will move crypto Twitter to CNBC, and I think that's the big thing, is that we'll see a lot more activity on the mainstream media around crypto in general, which gets back into this whole idea of it becoming the 12th sector. So let's go further into this. Also, Hong Kong is going in on this, and that is a big deal because now you're dealing with somewhat of a race where now Bitcoin in general, when you think of this in the major global markets, places like Hong Kong, what we've seen in Asia, if they are also successful in being able to get to market early, because they can't necessarily let BlackRock just kind of run the game on this. So I think that's another factor from a global standpoint. What I'm still curious about is why we have not seen the ETFs run in the UK and in the EU. That, I think, kind of pulls back into our whole thesis, is that really the market here in the United States is the one that matters when it comes to these ETFs. Further news is Barry Silbert stepping down over from DCG. And remember, Digital Currency Group, Grayscale, pretty much hand in hand. A couple of things that happened over the week, which was very, I think, a little surprising, but Schiffke is going to be succeeding Silbert as the chairman. And all of this is going to happen on January 1st, literally just next week. So why the quick move on this? And we have some theory about this. There are a couple things here. But anyway, Silbert stepping down as the CEO of Digital Currency Group, parent company of Grayscale, resigning from Grayscale's board of directors. The firm originally announced this the 26th. Okay, so right here on today. 8K filing in the U.S. SEC. And then January 1st is going to be when the new board consists of Schiffke, Kummel, and then Michael Sonishin, which of course is Grayscale. So why are they making this move? Are they just trying to do good for the SEC? Is there something else afoot here around GBTC and what this might look like for the future of this ETF? A couple of points I want to focus on here was Eric Balchunas. He hits on this on a tweet. I have no idea or info beyond this article, but my gut tells me that Grayscale is trying to show the SEC it's been a good boy. I don't know if that is going to be enough there because there's a lot of moves that have already been taking place. And I'll show you some examples of this. Of course, Safer comes in, very surprised, Silbert stepping down from Grayscale. And then wonder if we'll see Grayscale get sold in 2024. And there's two ways you could look at this. One, of course, is that they're trying to make good to the SEC to somehow get some sort of approval. Or it also could be just that heads are rolling to appease what might be angry investors in the future. So interesting scenario playing out right now. I've got a few clips for you guys. This was Ramawala talking of this, and he hit on a couple of things. Read as the decision is to improve the odds of the ETF approval. And I think I get what they're trying to do, but I doubt the SEC gave formal guidance to Barry to resign from the board. So simply meaning that the SEC may not have said, hey, you got to get this guy out of here, but that maybe there were some indicators that they understood that this was a problem. So that in itself, I think, along with what we've seen with GBTC over the last 6 months, I think is now finally coming to reality. If you just think about this, one of the biggest investors in GBTC was Cathie Wood, Cathie's ARK. I'm looking at her shares and price performance right here, and you can see the exit plan. Of course, remember, this was the last bull run dump, and then there's the gain that we saw on it, and then it's just been slowly going down until about right here, which was October. And then all of a sudden, it's just falling off a cliff, but we're still sitting on about 78 million 2.24 million shares at about 35 bucks, 78 million. So this is a race to the bottom for, especially for Cathie Wood's position, because obviously if she goes the route of getting out of this, where is she going to flip it? She's going to flip it to 21 shares. Hence, we'll show you some clips on that. I want to go to a clip quickly on this, and this is Cathie Wood's SEC mindset and what she's thinking. So it's an interesting clip. Listen in.
You know, I would say there's also a mindset difference. Just in the last few days, the SEC basically has denied the need for regulatory clarity at all. Coinbase had asked for it, and they, of course, are going to appeal that decision. But the SEC is repeating once again, no, you know, the regulatory structure we have in place is fine for crypto. And this also happened when derivatives became a question, and the SEC and the CFTC, the Commodity Futures Trading Commission, started bucking heads against this idea that one had control versus the other. And ultimately, that went to the Supreme Court, to Ophelia's point. It took many years, and in 2000, there was a decision, I think it was 2000, there was a decision that gave both of them jurisdiction and was very clear about which had jurisdiction over what and what they both had to agree on. So I think the same thing's going to happen here, and that Coinbase will take this to the Supreme Court.
I'm in agreement with that. I think Coinbase is going to the wall with this. And of course, the interesting point is that the SEC has still held their position. To Cathie's point there, I want to go into this of why crypto is becoming such an issue. Because remember, 2024 is an election year. We've got a lot of potential here that could showcase in the public opinion. Listen into this clip.
Gary Gensler was appointed by Joe Biden, I know with Senate ratification, but we think of that as executive. Then you've got judicial, the courts, and then you've got legislative, and they're all engaged right now, which is good. For a while there, we didn't have judicial, and judicial, you know, the crypto world has been winning in the court system against the SEC. And legislation, this is becoming an election year issue. 50 million people in the U.S., I think that's the number, own Bitcoin or other crypto. So I am really happy all three are engaged, as opposed to, you know, the iron fist of a regulatory agency alone.
Totally agree with that. It's something we've been looking at for a while, is that the agenda of what we could see on the political front becomes pretty much one of the major agenda talking points for a lot of candidates. And this will happen, I think, you know, system-wide, including Congress, a lot of what we'll see in the House of Representatives. All of that playing into a regulatory landscape. Here's Ron Hammond talking about this, that he's expecting to see a little bit of a regulatory alignment, but it's interesting what he states here. It might be different what we're seeing. He's talking about stablecoin, but I think there is going to be some version of stablecoin bill passed out of Congress in 24, but it could look very different depending on the vehicle. And remember, you know how bills get passed. They start, throwing so much into the bill that have nothing to do with the bill itself, but the idea is to try to get bipartisan support. You're throwing in those kind of scenarios. So that is something that could play out much earlier in 2024 than I think a lot of people will expect. So there's going to be some action for sure. Other clips I want to hit too. This, of course, is Cathie Wood talking about Bitcoin in general and crypto behaving like a new category. Listen in.
As of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That, we believe, is what is going to happen here.
I think that's a critical point and this is we've talked about before, is how much money is on the sidelines or in other classes of investments right now that could shift over in that 1 to 5%. Because believe me, 1 to 5%, the difference is in the trillions. So that's a major, major factor that she's hitting on. The question will be is how fast it moves. How fast do we see that? Now, timing is everything because we have the ETF coming in, you have the halving, you also have a market correction that's taking place around inflation and also a new election. So is 2024 potentially the biggest year ever for crypto? I'd love to find out if you guys think that's going to be the case. Remember, of course, I'd love to get your guys' comments, so drop down your comments below. We'd love to get your feedback. But also, if you're not subscribed to the channel right now, subscribe, because as you can see, we're approaching the 400,000 mark. This is going to be a major milestone for the channel. It's all because of guys like you, people like you. So make sure and just hit the subscribe button right now. Like a few videos, will you find your way into your algorithm? And hopefully you guys can get more alpha news for 2024, especially on your crypto journey. Now let's get over to ETH, because ETH is a big deal. And when you look at the Ethereum option on an ETF, this could be even bigger and have more of an impact. And as we all know, ETH has not necessarily been running as much or as fast as we like it to. So listen into this next clip on the ETH ETF.
But I would agree with her. It's probably a go in 24.
Yeah, better than 50-50 odds, which honestly, I'll take.
Definitely not staked ether, though. That would be a bridge too far, I'm sure.
We'll get there. We'll get there later.
We did just get staked. We got staked ether for the first time in Canada.
Here's a quick note from Raul. He's predicting that Ethereum will massively outperform Bitcoin. And that's a question mark, because I think this is something that a lot of people, I know they ask me, I'm sure you guys get it all the time, is which is better? Is Bitcoin the better route to take, or is Ethereum? So I think you have to figure out whether or not you want to hedge as it. You guys know our position. Even though we love Bitcoin, we love to report on it. The real reality is we go into these more aggressive assets because of the potential of the upside. A couple of points that Raul hits on right here. I thought this was interesting right here because he's a big Solana bull as well. Year of the story, this story has been Solana, which you've had all year long, and also Bitcoin. Because remember, Bitcoin came from 16.5 all the way to 44,000, which is where we are now. So not a bad year for Bitcoin, as well as some of these other risk assets like Solana. All right, so another item I want to hit on right here is institutional investors are poised for increased in crypto activity. And I think the point you have to remember is how much, back to Cathie Wood's statement, is it a 1%? That would be quite a bit, but does it go aggressively into a 5%? Because there's a couple of things that are happening right now within the market. Look at the S&P. I'll show you a chart on that in a second, but if you think about where the S&P has come, Remember, most of the gains that the S&P has gone through has been over the last 60 to 90 days. Now think about that along with what happened 2 weeks ago with the FOMC. FOMC comes in, Chair Powell goes dovish. You have an election coming in. There's a lot of things that could be rushing capital into the market, because I think that's the question mark, is how much comes off the sidelines from money market funds and starts to find their way into bonds and also other categories such as crypto. Since late October, there's been a noticeable uptick in institutional activity, largely driven by anticipation on the ETF news expected in January. So that in itself around the clients, because this goes back to the whole point of traditional investors getting advice from their financial advisors. Yeah, you should have some exposure now, and we're going to have a vehicle for it. Further in this article, it says the potential of an ARK Invest spot Bitcoin ETF in January could be a significant driver for Bitcoin's appreciation. So do we see it? I'd love to know if you guys think that's going to happen. Is this going to be a nothing burger, meaning Bitcoin's price doesn't move much, or does this get us over the 50K mark? Remember, we're only 2 weeks away from this, so it's going to happen and happen very quickly. All right, so one more point I want to hit on right here is a rate cut situation could make risk assets like Bitcoin much more attractive. And if you believe we're going to get rate cuts, which there's a lot of analysts think that we're going to get multiple rate cuts, and with inflation slowing, this is another thing with inflation. You guys know that inflation is cumulative, right? It doesn't mean that inflation is down. It means that it's slowing. It hasn't grown as fast. So we've already had that 8%. Now we're at a 5% or now moving to a 4%. That's the whole point of inflation. So it's still, prices are high. So I think the rate cut comparison opportunity here of the Fed coming in with multiple rate cuts is real. And if that does happen, institutional capital will look at alternatives for that. Now I want to get into Ophelia Snyder because she's part of 21 Shares, and she goes into a little bit more detail here about the thesis of crypto and why it matters to new investors. Listen in.
That's not the day one. Day one's going to be a few basis points. It's going to be a couple of months of compliance reviews followed by a few basis points, followed by a lot of work. So it's going to take longer than people think it's going to, first of all. But what is a couple of basis points of a few $1 trillion? Because the issue is that the numbers are way bigger than crypto has ever seen before. Crypto has no idea what money looks like when you're playing with an extra 3 zeros. We think $1 billion is a lot of money. It's not. And I think that's the piece that's just impossible for the industry to conceive of today.
Yeah, but I think one of the reasons we now have the big traditional financial companies involved is they know that.
Yes.
They know that very well. They're quite happy to accommodate it now.
All right. So, everybody says, okay, well, how could you have foreseen what is going on right now within not only the crypto markets, but also into the potential of what 24 and 25 might look like? Everybody knew the halving was coming. And I think there was a lot of signals that were already in place a year ago. If you go back to a video we did, actually, let's go look at the date. A year ago. So end of last December, remember where Bitcoin was. And I'll show you a chart on that here in a second. But I want to play this clip for you from that video. Listen in. The aspect around this, there's some key points that they're making right here. The partnership between BlackRock and Coinbase is significant for both traditional finance institutions and the crypto industry. It does not come as a surprise. This, I think, is, again, a race to bringing the competition right to Fidelity's doorstep. That's really, I feel like, what this is about. And if you look at what Larry Fink says, who's also been previously stated, he's fascinated by Bitcoin. Now it's fascination. Prior to that, he was not interested in Bitcoin or cryptocurrency at all. What I think is coming to light is that this asset class is now one that these institutions cannot deny. All right, so really is the point here is that, yes, that was a turning point, I think, not only for the recognition by the major Wall Street players, but also I think the markets themselves. What is a little bit surprising is that we didn't really see the markets spin on that. When you look back at the annual here on Bitcoin, I'm on the daily, and I'll squeeze this way back out here to this time last year. I want you guys to look at this chart closely, because timing the bottom, everybody says you can't do it. Well, I mean, in a way, BlackRock did time the bottom. If you think about this, look at the zone that this would have been played in right here between what was November through early January, right here, before we started to see that move. And that's when Bitcoin was at $16,500. So $16,500, and let's just take a look at the market since that bottom right there on up to where we are today. We're talking about 154% move. Not a bad situation for priming a market and going into what could be the biggest shift into a financial sector, maybe in the history of all of finance, and that is moving into a digital money that is going to be considered around Bitcoin, but also crypto in general. I think the industry has come of age. 2024 is going to be one of the biggest years we've ever seen in crypto. So if you guys are not part of our Diamond Circle, and to stay part of this, all you have to do is click the link down below. We send you a few emails. You'll get caught up on a lot of the things you might miss here on the YouTube channel. It's a great place to get additional alpha, more podcasts, all that good stuff. Also, very easy to catch some of our, when we do some of our MSI data, which is our sentiment analysis data, we'll drop it into the Diamond Circle. If you guys are not following me out there on X, make sure and do that. It's just @Paul Barron. We'll catch you next time right here on TechPath.